Chip Nellinger, John Payne rejoining us. All right, Chip, the latest drought monitor this week shows improvement. We have about 50% of the U.S. soybean crop now in drought, an improvement there, some improvements in the corn crop. As we look at the forecast next week, I mean, we've seen parts of Iowa and Illinois get some rain. It looks like things are turning drier. Of course, we're going to get this heat. Do you think it impacts the corn market or the soybean market more?
Yeah, I think it's a little bit of both. And I think this week the market started to get it a little bit right, where corn kind of caught up to where beans have been. At least initially, this heat is going to be probably most affecting the corn market, because you've got a lot of corn that's either starting or well into pollination or grain fill. So it's really a matter of how long the heat lasts. If it's 3 days of 100 degrees and then you get some rain on top of it, probably not that big of a deal. If it's 3 weeks of 100-degree temperatures, like some of the weather models are hinting at, and no rain, or the rain is pushed way further north because of the high pressure ridge, then you're talking about heat and dryness at the exact wrong time, and it's going to affect both corn and beans. Beans starting to flower, so really they're kind of both in the same boat right now. It's a matter of how long the heat lasts and how deep into August without rainfall, and really it's going to be critical to yield. And really, you've seen that volatility start this week in the corn and the bean markets. It's really going to expand next week, depending on what the forecast says.
Well, these forecasts and these weather models have been so conflicting this year, which has really had an impact, even with the short-term changes in the weather forecast. But when you look at cattle inventory, John, I mean, we're having this conversation before USDA officially releases those cattle inventory reports. What if we don't see inventory change much? Do you think this momentum can continue in the cattle markets?
Yeah, I think we've got something that's got to break here. Either feeders are too cheap or too expensive, or live is too cheap. And so you've got beef that's really come off here. 345 last week, or 2 weeks ago rather, was the high set, and we now see it really come off. We think 280 maybe in the cards for the beef. So I don't think the report that you're going to see when you at post watching this should be moving the market much. I think a lot of it is just about demand, where corn works into the situation here. But all in all, crush margins aren't great for feeder cattle right now. They're really down in the deferred contracts, 24 contracts. So again, I think you've got expensive feeders and somewhat cheap live, even though we're at record prices. I just don't see that holding forever.
Well, based on some of the, possibilities of what we could see with cattle inventories and cattle on feed, but also looking at the demand side, Chip, what do you think? Do you think something has to give here with the cattle markets?
Yeah, something does have to give, and I agree with John. I think you got to look at the inventory reports here, the multi-year drought. Obviously, the breeding stock liquidation is really what's tightened things up a little bit. There's an argument that, well, once feeders get back, or the cow-calf guy gets back and starts retaining heifers to build that cow inventory, that really you're going to see the most amount of tightness. But the problem is here, that's supply, and the demand side of it's the other equation. There's some indications here, although we bounced back a little bit this week on our export sales, that these high prices are starting to eat into demand. So that's the other side that we really have to watch closely. Obviously, the supplies are tight. They'll watch the inventory report. They'll watch the cattle on feed numbers. It takes a while to turn that ship as far as, those numbers. That's a multi-year process. But the fear here is long-term, that we're really starting to chew into that demand base with these high prices, record high prices across the board on the beef side.
Well, we had seen export demand be pretty strong when it comes to hogs and pork prices. But when you look at the bellies, what has changed? I mean, you described it, John, as bellies are on fire right now. What has changed in this market?
Well, the market got really bearish on the Prop 12 news. And I don't even like to say it was because of Prop 12. It just happened to happen at that time. But you had the cash products, obviously, that sold off. And then the primals were down heavily. I mean, we were trading $80 bellies at that point, and we just roared back. Demand is great. I think that's the one thing. You look at beef up here at $300, and pork, can trade it. The carcass can trade at $100. That is not out of the question here. So now the move is, do you get out here and hedge some of these margins in the Feb and the December contracts? Decent Feb vols are still pretty low, and I think that corn obviously being up hurts that a little bit, or helps hog prices a little bit, but I just wonder how long we can hang here. China's facing deflation, and that's a market we're going to need to be on fire here. So short term, I think that we've probably done enough seasonally. This is the time to sell it. But I would imagine August is going to give some folks some heartburn here in the deliveries we're doing today.
All right. Well, before we go, Chip, there's a lot of questions right now from farmers, those who do have some old crop still in the bin, but also looking at new crop, wondering what do we do? We've seen these commodity prices on fire this week. Is this time to act? What are you telling producers right now, Chip?
Yeah, it's a case by case scenario, and it depends on what your crop production prospects are. If you've been hurt by drought and your yields are hurt, but you have a high level of crop insurance, corn's still below the spring price. So that might mean being a little bit patient here. Now, beans have been back above the spring price. If you've been getting rain, probably an opportunity here, $14 and north, to maybe get a few sales on the books. You're going to want to save, some bullets for some potential volatility the next couple of weeks. And there's strategies out there to help you lock a floor in, whether that's selling physical and buying a call, or not selling the physical and buying puts or put spreads, so that you protect the downside risk and still leave some upside open. I think that's key this year with the potential weather uncertainty ahead of us.
John, Chip, thank you so much for joining us this weekend. We need to take a quick break and talking about some of that extreme weather. We're off to Kentucky, where they have just seen massive flooding this week. Really a quick change for them. We'll head to Kentucky next, right here on U.S. Farm Report.